Hello, this is Dr. James Joey again. This is Business 146, Chapter 2, Part 3, the final one here. We're going to teach you how to do an effective budget, plan for effective budgeting. Now, a budget is a little bit more difficult than some of these other things because previously we're just saying, okay, is this income? Is this a liability? And then you add up or is this an asset or is this liability? You add up all your assets, add up all your liabilities, which come up with is your leftover. What's left over is your net worth, right? Sorry. And then when we did the personal cash flow statement, we said, okay, this is income, this is cash coming in, right? It's pretty easy to determine that. Here's cash going out during the period. What's left over is my surplus if I have something left over, or if I don't have enough to cover all my outflows, my deficit. Now, here we've got to make some decisions, okay? We have to look at how much money we're spending on these things, and a lot of that we'll get from that cash flow. And then we have to say, is that too much or not enough? Okay? And we've got to adjust these things so that we can meet our plan, which is our planned savings, okay? And that's based on things that are going to happen in the future, oftentimes, like your retirement. How much money are you going to need when you retire? I mean, that's a difficult question to answer. So we're going to work with this. Now, a budgeting or spending plan is necessary for successful financial planning, and here's why. It helps you live within your income, which is something that people really need to work on now. As I said before, fewer than I think 44% of all Americans have less than $1,000 saved up for emergencies, and 1,000 isn't enough. Okay, it should be 3 to 6 months worth of expenses. Um, it'll help you spend money wisely. See, you say, okay, I need this, I want this, right? Is it in my budget? It'll help you reach your financial goals of having enough to retire, having enough to pay for your kids to go to college, having enough money to go on a vacation, having enough money to travel when you're retired, whatever it is. Okay, having enough money to pay for your daughters to get married, whatever it is. Um, it'll help you to prepare for financial emergencies because we're going to have money put into savings for emergencies if we do it right, and develop wise financial habits, which are very important. Um, doing all this stuff is difficult at first. It's like it's a change. It's something down in the future I don't want to do. Right? I want to do something more important now. I'm gonna forego the future and only concern myself with the present. Those are all big mistakes. So it's difficult to do. Nobody likes to do it. I don't like to save. Nobody likes to do it. I'd rather spend all my money now and just have more money later. But the problem is, I'm not always going to have more money later. And I'm not going to always have enough money to buy the things that I want. I'm going to have to achieve financial plans to be where I want to be at certain points in time in the future. So these things, but once you start doing it over and over and over and you start following it, it becomes a habit. If you fall off the horse once, don't worry about it. Say, okay, I messed up, bad me, boom, 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 right? Slap your hand. And then get back on the horse. Okay, get back following the budget. Okay, and eventually it'll become a habit, and you'll be good at it. Now, this is important. You need to know the steps. Number one is set financial goals. Okay, let's say you're 25 years old, right? You might say, well, in 10 years, for 5 years, whatever, I want to buy my first house. Well, if you're going to buy a first house, you're going to have 20% down. So if you want to buy $100,000 house, which is not an extravagant house, it's about what you might pay for a starter house around here, maybe a little bit more even. Um, you're going to have to say, all right, if I want to buy this house in 10 years, I have to have $20,000 cash to hand over to pay for that house. I have to have that down payment. If you want to buy a new car, right, which I don't recommend, but maybe you want to buy a used car, okay, it's going to be a $20,000 pickup truck 2 years from now, okay? You might want to say, hey, I want to have money down so I get a low interest rate, get a low payment, and maybe you come to the idea that maybe you need to have $3,000 down or $5,000 down to get the pickup truck, that you might want in 2 to 3 years. So you say, all right, I gotta have $5,000 to $7,000, whatever it is, on this date, so that I have a good down payment to go out and buy myself a nice used pickup truck. Don't buy a new one. There's F-150 is like $70,000. Okay. Um, you want to budget an emergency fund in savings. I cannot tell you how important that is. You must do it. If you don't do it, you will pay for it. Okay. Someday an emergency will come up. You will not have the money to handle it, and it is a disaster, and it's very stressful. Okay. Maybe you get hurt. Okay. And you go to the hospital, and they're like, well, we got to do surgery on you, and we're not going to do it unless you have $2,000 cash to pay us. If you don't have the $2,000 cash, they're not going to do it. Okay. Um, budget fixed expenses, budget variable expenses. We talked about those when we did the cash flows. Record spending amounts. Okay, that's another part. How do you do that? Review spending and savings patterns. Okay. Review financial progress, review goals and budget allocations. So all of these are helpful things that can come. All of these are steps, my fault, to doing a budget. You want to review your financial progress. Am I getting where I want to go? Am I not following the budget? Is this thing that I'm going to buy, maybe the truck or the house, did it go up in price and now I need to have more money for a down payment? So I got to readjust my budget to make sure that I have that money when I need it. Those are all things that you have to do. You might review goals. Maybe you save up for a child's education and you have 3 kids. Well, then guess what? You got to triple that money. Okay. Developing a monthly budget. Step 1 is to produce those financial goals. And this is very hard to see here. I know. I'm going to show you something in a minute here. But this person says reduce credit card debt and increase the amount in their emergency funds. Write that on there. Okay. All of you right now, all of you, especially if you're young, you should be doing that. Okay. You shouldn't be using credit cards to buy things you want. Okay. You shouldn't say, oh, I want some new shoes this month. Not that I need them, right? I mean, if you need shoes, you got to buy shoes, right? But let's say the new Air Jordan, I don't know how long it's been around, Air Jordan 55 comes out, okay? And you say, oh, I'll buy it, but I don't have the money. I would not put Air Jordans on a credit card, especially if they are not shoes that I need. Now, if I was a DJ or something and I had to have the newest Air Jordans on there, or people would think I was a bad DJ or a basketball player, then that's a necessity. But I would not put consumer goods, things that aren't necessary, on credit cards and say, if I don't have the money, I'm not going to buy it, right? And if I don't have it budgeted, I'm not going to buy it. And I can save up for it, and I can wait for it. Okay? So reduce credit card debt, increase the amount in an emergency fund. That's a very basic set of goals for a budget, very simple. As life gets more complicated, so do the budgets and your goals for them. Step 2, we're going to estimate expected income from all sources. This amount is to be allocated among various outflow categories. So here, this guy has budgeted dollars. He has income after taxes of $2,874. Okay, so he writes that down here, actual amount. Now, I have a form just like this that I've put online for all of you, if I can find it. Here, I'll open it up again. Okay. And this is online right after the video, so we're going to go over here to, here's the balance sheet we just did, personal cash flows we just did. Here's the personal budget. So this looks a little bit different, but here I'm going to put the dollar amount. This is how much I expect my salary to be, this much. You can go look at your your paycheck stubs, your tax return documents, etc., to find out what that is. Maybe you've got some other income coming in here. Maybe you've got $1,000 in a savings account. It pays you $10 or $20 a month or whatever. You can put that in there. Okay, calculate the percentage, add them up. That's how much money I have every month coming in. Then you've got expenses here. Okay, if most people have a mortgage or a rent payment that they have to make every month, that's a fixed expense. Put that down. Property taxes. Okay, if you own a home, you have to pay property taxes. For a lot of us, because if you have a mortgage, then you also have property taxes, mortgage, and homeowners insurance all in one little payment every month. Okay, that you make to the mortgage company. Then they pay the insurance and they pay the taxes for you. Any loan payments you have, right? That's going to go down here. Something that's the same every month. Every month, I make a $250 loan payment on the car or whatever it is. Any insurance payments. These are things that are fixed. They're the same generally month to month to month. They don't often change. And anything else that you might have. Those are total fixed expenses. Maybe you have a job and you have to make a tool payment or something. Okay, that could be an other. You have to pay the Snap-on dealer for your tools every month, $200. Then you add those up, calculate the percentage, add them up, and then over here you're going to put actual amounts. So if you if you make a little bit more money, you do some overtime, the actual amount might be more than your budgeted amount for the salary, and then you put the variance here. How much did it vary by? Maybe I made $50 extra by working overtime a couple of hours or something. Okay, same thing here. Property taxes, sometimes they do change, right? And maybe my property taxes were higher than I budgeted this month. I'm going to put the difference here. Okay, and that'd be a negative amount if it went up. Then here, we've got emergency fund savings for maybe a short-term or intermediate goal. Maybe you want to pay for your tuition next semester, pay cash for it, right? You want the cash ready. Okay, savings for long-term goals, right? Maybe I want to buy a house in 10 or 20 years. Okay, that would be my savings for long-term goal I might put in here. Okay, that's total savings. Then you've got your variable expenses, food, utilities, clothing, transportation costs, etc. And you can add others down here. Okay, budget that, how much you budget for that, how much you expect to spend. And if you spend more or less than that, put it over here and put the variance over here. Then we're going to add up our total expenses, okay, our budgeted expenses. All right. Now, by doing this, look right here. That's budgeted. Every month, I expect to put $100 in my emergency fund till I get, to 3 months' salary or something. Every month, I'm going to save $100. So actually, it'd be more than that. $400 or something. So I have enough to pay my tuition and books. Okay, maybe I've got a scholarship, but I have to still pay some tuition, and I got to buy my own books. I'm going to budget for that. I'm going to put that money away, and then I'm not going to touch it. And then I want to buy that truck in 2 years, so I'm going to put, if it's 24 months between now and when I want to buy the truck, and I want to have $3,000, I'm going to put a little bit more than $100 every month, maybe 125, I think, into. I didn't do the math in my head. Sorry. $125 every month into savings so that I can have a $3,000 to put as a down payment on a new truck. These variable expenses, you got to watch those. Those are going to change, right? Food, nobody spends the exact same amount every year on food. But if I've got $500 in here a month for food, and I've spent $350 already, and it's only the middle of the month, then I know I got to tighten my belt. Instead of eating steak, I got to eat more macaroni and cheese to keep my total spending on food at under $150. Okay. Then, going back here, those are these various steps. There's step 2 was estimate expected income, right? We did that. Step 3, budget amount for an emergency fund, periodic expenses and financial goals. We did that. You can see here, she's got, oops, I want to go back here. I can't make that bigger, can I? But she's got savings for auto insurance. Maybe she pays her auto insurance every 6 months. Every 6 months, she's got to have $400 or whatever it is to pay for her insurance. Savings for education, savings for I can't even read that. Investments. Okay, long-term investments. That was vacation, the second one. So her savings were for auto insurance, a vacation, and investments. Short, medium, intermediate, and long-term goals. Um, her fixed expenses every month. She's got to make a mortgage payment. She's got to pay property taxes, auto loan payment, life insurance. Okay, she adds those up. All right. Then she's got food of $400, utilities of 172, clothing around 116. All that's added up. So here, that $2,874 that she made, she's got that money budgeted somewhere. And Dave Ramsey, who I really like to quote a lot on this budgeting thing here, he says that every dollar should have a name. And what he means is every dollar should be budgeted. And that's what you should do to the best of your ability. Okay. So if I budget $200 a month to save, I got to save that money. Okay. That money's got that name on it, and that's where it goes. I'm budgeting, I'm managing my own finances rather than just going willy nilly out there. Okay. Step 4, budget set amounts that you are obligated to pay. That's the fixed expenses. Step 5, budget estimated amounts to be spent for various uh, household and living expenses, right? Step 6, record the actual amount. So here, one way we might want to do that is through our checkbook. If you write checks, write on there, what is this spent for? Where does this come out of? Which budget does this come out of? And then it shows up on the duplicate. This is coming out of my clothing budget. This is coming out of my food budget. Okay. Um, Another way you can do that is with a debit card. Is you can go in there every month, and add up. Okay, this went to food, this goes to food, right? Or periodically add it up, and this has gone to food, so you can see how much you have left of the budget. Um, a lot of banks, I bank with a certain bank, they have a little thing that'll track your spending for you if you like. Okay, it's not the best thing, it's not the most accurate, but they look at, say, if you shopped at a grocery store, they'll count that as food. If you wrote a check to an insurance company, they'll count it as insurance, and they'll block it off, and you can see totals every month. If your bank doesn't do that, you got to do that by hand. Okay. And then finally, step 7 is evaluate um, whether or not you followed the plan or you did a good job, right? And if you look here, um, who's this? The Robinson family. They actually overspent by $17. Okay, they had a variance of negative 17. Okay, if you overspend, that's a negative. You're subtracting this actual amount from the budgeted dollars. So here they were supposed to spend 402 on food. They spent 417. That's negative $15. So in this case, they failed to meet their budget. They spent $17 more than they had budgeted. And then they can look to see where it was. And if you look here, their big overspendings were food. This is not big. $17 is not anything to get overly excited about, but food and transportation, and the biggest one was personal health care. Maybe they had more health care bills this month. So they might say, well, yeah, I did have, $29 more in health care bills than I had this month, but that changes next month, month to month. Next month, I might have $29 fewer healthcare bills than I budgeted. Okay, but you're going to evaluate and say, are these things I can fix, right? The food budget, that's pretty easy, right? You say, all right, we're going to do a better job of keeping track of how much we spend on the food, and we're going to keep a running total. And as we start getting closer to our budget, we're going to start buying more mac and cheese and fewer steaks, and we're going to keep that money. We're going to budget that money so that this $402 lasts all month and we don't overspend. Okay. And you can use this to reevaluate your goals. We need to put more money into healthcare, and here less money into clothing, right? So that's what this budget is useful for. Okay. Here are just some rough numbers for people. You can find your age here, and if you're married, right? I'm an old man. I don't see they all have old men in here. parents over 18, right? Housing or mortgage, it's a good number, 25 to 30%. You should not be spending more than 20 to 30% of your after-tax income on housing, and that includes rent, mortgage payment, utilities, furnishings, appliances, etc. Transportation, 12 to 18%. I see a lot of people out there with brand new F-150 pickup trucks or stuff like that, right? Or nice cars that run them $60,000, $70,000, right? If they're spending more than 10 to 18% of their income, and they are parents with children over children over 18 and in college, right? That's a problem. So these are good things to look at for yourself. If you look here, the savings, right? Working, single, no dependents. Okay, if you are a single mom or a single dad, everything relies on you. Your income is the only income. If something happens to you or to your job, your hours get cut, you get laid off, you get hurt, there's no income coming in. So you have to have more savings than someone who maybe is just a couple with no children. You can look and see here. Okay. So you should shoot for these savings percentages too. Okay, in fact, I think some of these at the lower end are actually low. Okay, especially if you consider the fact that there's going to be no Social Security, which these guys, when they do this, don't anticipate that. They anticipate getting Social Security. All right. That's it for this lecture. It's 21 minutes. I went overboard. I'll have short questions afterwards. Have a good one. Thank you and goodbye. Don't forget this, real quick though. Don't forget that oh, my brain's going on me. Don't forget that the forms that I showed you, those can be pulled up in that Chapter 2 file folder. If you go to course content, scroll down to the second chapter. At the bottom of the second chapter, I have those financial statement forms for you. What I want you to do is go ahead and take these, fill them out, obviously, and fill them out truthfully. Obviously, I don't want you to turn them in because I don't want you to give me your personal information. So you'll keep them. Just send me a Blackboard message saying that you did them and put in a subject financial statements, and there will be some points given for them. Okay, probably extra credit points. All right, probably give you maybe 1% on your final grade. So if you're a little short of an A or a B or whatever, that'll help put you up. But I would do these for my own purposes. If you can do this, make it a habit and keep doing it throughout your life will be better. It will be less chaotic, more planned, and you will get more out of it. Thank you. Goodbye.